Hey, what's up, guys? Tyson here. I was going to do some TA on the Bitcoin chart, and I figured I might as well record it if I was going to spend the time doing it, since it's been a while since I recorded a video. So for all two of my followers, I hope you enjoy the content. So on Monday, it was looking like we were going to get a breakout here in Bitcoin, only to have it be promptly rejected right as it crossed over the 100,000 mark again. It cannot sustainably stay above $100,000, which is, I wouldn't necessarily call it a problem yet, but it definitely is acting as a major hurdle for Bitcoin to get over that six-figure mark in a durable fashion. Now, there's a couple things that I haven't seen anyone really talking about that I wanted to address here. Outside of the dip that we've gotten, the chart action that we're having right now is almost identical to what happened last January. Last January, we had Bitcoin run up. Actually, let me just open up a new. I'm just going to open up a new window here and look at it this way. So last January, let's see, where are we? Keep scrolling past it, so I don't want to go too far. Here we are. So leading into the end of the year, we had a run up, and then it faded a little bit, and then right at the beginning of January, it started to rip higher. We thought, here we go. We're going to start making our run toward an all-time high. And then it's faked everyone out right at around $49,000, pretty much to the dollar, $49,000, and then faded for almost the entire month of January. It got to the point where it dipped, kind of a quick flash dip to 38,500 on January 23rd of last year. So I've come to understand that the jobs report and jobs data actually has a pretty large influence on Bitcoin. So considering we are getting our jobs report on Friday, this Friday, what is today, the 8th? So the markets are closed tomorrow, January 9th, in observance of Jimmy Carter's death. And then we have the markets are open again Friday, but that's when we get our jobs report. So this could be a preemptive dip that we're experiencing now. Jobs data may have leaked. The selling may have already started as a result of that. But I just wanted to note that this is exactly what happened last January. We had a pretty significant fade through the entire month until it came $1,000 within touching the bull market support band. Now I think, based on current action, we could be dealing with the same situation. I don't know that we will actually. I don't know how far things will really fall, but for us to go higher, we do have to come down. Now, it's tough to gauge where support is because it's bouncing where it should be right now. Earlier today, I was going to record a video, but things were falling so quickly that I wanted to give it a little bit of time before actually making a video, because I wasn't exactly sure where things were going to go. And if I'm going to make a video and then like an hour later it's a pointless video because everything changed, why even make the video? But anyway, so we did get a little bit of a bounce, which is what you would want to see if this is going to hold as support, because we have this dotted line here acting as support, and we also have this solid line here at 91,500. So if this 91,500 level fails, then pretty much all bets are off, and we could probably come down quite a bit further. Now, I would be shocked if it came down much further than the bottom of the bull market support band, which is currently $77,732. It could treat this structure as support right at about 73,700. That's pretty much where I would consider the bottom to be. Now, of course, it could go lower. It could try to test this uptrend line that we've had going on now for quite a while. Where does this go back to? This goes back to September of 2023, this uptrend. So that's a pretty significant uptrend. It could always try to retest that, or it could do it later. But the one thing that I wanted to bring up, because calling the bottom is sort of difficult without a number of metrics pointing to confluence, is the IBIT chart. Now, ever since Bitcoin started trading futures, I think it was, I don't know how many years ago now, 4 or 5 years ago, or maybe even 6 years ago. I forget when Bitcoin futures were launched. Ever since that point, it seems like Bitcoin does not like gaps, or the fiat market, I should say, does not like gaps. And since the crypto markets never close on weekends or at night, the fiat markets are sort of left holding the bag one way or another if it rips up or dives down when markets are closed. So when you look at the Bitcoin chart here, and this is the historical index, this is all of the major indexes compiled into a single price. Right around the election, the price exploded. Now, if you look at the IBIT chart, which is statistically the largest Bitcoin ETF, there's a lot of money involved here, a lot of major players invested. I think this is an important chart to watch because I do believe it might have influence on the price of Bitcoin at this point. There's so much money involved and so much influence involved in these ETFs that they can't just be ignored. So if we look at the election back on November 5th, the price went up, and then on Wednesday, overnight, the price of Bitcoin had exploded essentially and opened up above the previous high. Now, this gap up isn't an issue because it had already closed this price. So it came down and touched the top of that structure. So in technical terms, that is a complete structure. It doesn't need to come back down to fill this gap at any point in the future. But so we had trading on the fiat markets within the Bitcoin ETFs. We had trading Wednesday, Thursday, Friday. It went up all week long, and then over the course of the weekend, Bitcoin just kept running, and it ran several thousand more dollars. And then by the time fiat markets opened again on Monday, we were left with this gap. Now, a gap doesn't have to, there's no time limit on when a gap needs to be filled, but a lot of times gaps do need to be filled, especially in longer term structures. So whether or not this price comes back down, the Bitcoin price comes back down before we create another all-time high, or whether this happens many years into the future is yet to be seen. But if we are going to test the upper limits of what this cycle may provide, in my opinion, which is about $160,000 to a $200,000 Bitcoin, we should really come back down into this bull market support band. So up here in the Bitcoin chart, if it came down to even somewhat touch or preferably come down inside of the bull market support band and touch the bottom of the band to fill this gap, it's off to the races. I would love to see that. That would be a complete structure. The gap would be filled and we'd be off to the races. I would, again, not financial advice, but I would be all in at that point. If it came down inside of this bull market support band, somewhere around the range of $78,000, probably about $78,000 at this point. If it came down that low, even if it was a flash dip that lasted 15 minutes, that would be enough to consider the chart complete. Now, this would have to happen. Here's the thing is, for IBIT, this would have to happen during trading hours. So anytime between 9:30 and 4 p.m. Monday through Friday. If it happens any other time, like if this crash or this dip, I shouldn't call it a crash, but if this dip in Bitcoin comes down to 78 on a Saturday evening and then shoots back up, that's not going to do too much for IBIT. Now, that could mean a lot for Bitcoin in the short to medium term, but in the long term, it may mean that Bitcoin needs to come back down to test that $78,000 level many years from now in a different cycle. But I just wanted to show you these are the ranges that I'm looking at. Right now, it's holding support. This is what I would consider like first critical level of support. Well, second critical level. It already failed the first one up here. If it would have held at about 98,000, we might still be looking at going higher sooner than later. But that first level failed. Second level is now currently holding at this green dotted line at 93.2, somewhere in that range. It's not bouncing too significantly, but the leg is decently long enough where there is enough buying interest here to send it back higher a little bit. But it's sort of just hovering about and almost bleeding a little bit more again, back towards 3% down for the day. I'm just keeping my eyes open for entry into this bull market support band, somewhere in this level. I'll probably personally, just to explain what I am looking for in terms of buying levels, I will probably start adding very, very small amounts of really everything. Bitcoin, other assets like Ethereum and Chainlink. I'll probably be looking to add around the $84,000 to $85,000 level for Bitcoin, because last time the dip did not come down to the bull market support band. It stopped about $1,000 above it. Now the bottom of this structure is somewhere right around $85,000, pretty much right there. If it came down to 85, I'm probably looking to start buying. If it comes down any closer to the bull market support band, I'm definitely buying more here. And if it comes down to the bottom of the band at 77.8, or even if we get really lucky, about 73.7. If it came down below 74, personally, I may have to go all in on what I have currently available to trade with, because at that point, at $74,000, the downside risk seems almost eliminated. You might get a few more percent. Again, I think absolute worst case scenario at this point in time is probably 68, 68.5, 68.6, 68.7. It depends on at what point it comes down here. If we're talking about the end of January, it might be more like $70,000. So if it's January 26th and the jobs number wasn't great and Bitcoin continues to bleed and the bull market support band isn't proving to be support, neither is this uptrend line and all that stuff, and it just keeps coming down, $70,000 I believe is where I would be saying that's got to be bottom, and I would assume things would start going up from there. That's probably worst case scenario. May happen, may not. The daily is definitely looking like it wants to go lower, but if you go on the longer time frames, it does look like there's a lot less information here on like the monthly, for example. On the monthly, if this runs back up to like $96,000 and we open February like here at like 96.5, then it might just rip higher. But then again, that may also occur after a dip down here to that $85,000 level too. So if we get a pretty quick dip down to these levels and then it like gets back above this $92,000 level and sort of hangs out there, that would be the same move that we experienced basically, where was it? Back here in, where's December? Oh, there it is. So this was the spinning top doji that we got back here in January. So went up, went down, spinning top doji, and then probably one of the most massive green candles we've experienced in Bitcoin on the monthly in quite some time. Could happen again. It could happen again. And again, my top for Bitcoin is probably anywhere between 160 and 200. I don't know. I can't see I can't see much higher than that for this cycle. Again, I could be wrong, but those are the levels I'm looking at. Just real quick on the weekly. The weekly's not looking too great either. I would still expect it to roll over based on that action. But just keep in mind, this gap for the fiat market exists. And as I said, gaps like to be filled, especially when there's so much money involved. So if Bitcoin came down into this bull market support band and even touched the bottom of it, which is where it's at right now at the bottom of this gap, that's perfect. I can't imagine a more perfect scenario for it to just, like, by the end of January come down to this level, to like the, well, on IBIT, the like $44 level. That's absolutely perfect. But when things are too perfect in trading, usually they don't happen. When everyone's expecting a a specific result, you typically don't get it. So yeah, that's what I'm looking at. Hoping to get back into semi more regular videos now that we have a little bit of a direction here, especially with us approaching a potential peak in the cycle. Again, those peaks are like, everyone seems to be looking for a March, April, May peak. And when everyone is expecting a peak at the exact same time, it's like, well, if that's what the masses are expecting, then I almost sort of feel like that's not what's going to happen. So let's just hope we get back above the prior high. Let's hope we get into the 120s at the very least for Bitcoin, and then we can reassess from there. But, we get that rip from Bitcoin, and then we're going to go into an alt cycle, and it might be one of the craziest alt cycles we've ever experienced. So anyway, that's it for now, and I'll be back at some point soon. See you later.